This course is a companion to the book, The Project Brain, Evolving Project Managers, available on Amazon. If you find today's session valuable, the book goes deeper on every framework you are about to learn, including the 3-tier document system, the janitor protocol, synthetic stakeholder simulations, and the full blueprint for an artificial intelligence-powered project management office you can run from your own desktop. You can find it by searching for The Project Brain by Self-Made PM on Amazon, or by visiting selfmadepm.com. Now let us begin the course. 1. Welcome to this 90-minute professional development session on essential business jargon. Over the next 90 minutes, you will decode the financial, operational, compliance, and strategy terms that show up in every steering committee and executive review. This course is eligible for 1.5 self-reported professional development units with the Project Management Institute under the online or digital media category, and it maps to the Business Acumen edge of the Project Management Institute talent triangle. Let us begin. 2. By the end of this session, you will be able to do 3 things. First, you will be able to recognize and correctly use the core financial vocabulary that drives executive decisions, including return on investment, internal rate of return, and the distinction between capital and operational expenditure. Second, you will be able to interpret the key performance indicators most commonly discussed at the leadership level, including Net Promoter Score, customer acquisition cost, lifetime value, and objectives and key results. Third, you will be able to navigate technical, compliance, and strategy terminology with enough fluency to contribute meaningfully in any boardroom conversation. 3. Here's how we will spend our 90 minutes together. Part 1 explains why jargon exists and why decoding it is a career investment, not a chore. Part 2 covers the essential financial vocabulary. Part 3 covers the key performance indicators that appear in every executive meeting. Part 4 covers technical and operational terminology. Part 5 covers compliance, legal, and strategic buzzwords. Part 6 gives you a practical system for building your own vocabulary over time. At the end, I will walk you through exactly how to claim your professional development units. Imagine you are in a steering committee. The Chief Financial Officer mentions that the project's internal rate of return needs to exceed the hurdle rate by quarter 3, or the Capital Committee will reallocate the budget to initiatives with better return on invested capital. The room nods. You have no idea what just happened, but you nod too because asking feels like admitting you do not belong. This scene plays out thousands of times a day across organizations worldwide. Let us explain why and what to do about it. Jargon serves 2 purposes. The first is efficiency, and it is legitimate. Saying return on investment is faster than saying the ratio of net profit to the cost of investment expressed as a percentage. When everyone in the room understands the shorthand, it accelerates communication. A meeting that would take 2 hours without the shorthand takes 40 minutes with it. That is real value. 6. The second purpose is less admirable but equally real. Jargon signals membership in a professional tribe. Executives who grew up speaking this language sometimes use it to test whether newcomers belong. Understanding this dynamic changes how you approach jargon learning. It is not pedantry. It is a strategic investment in your professional credibility. The faster you decode the language, the faster your contributions are heard, rather than filtered through the lens of, does this person belong here? 7. Financial jargon dominates boardroom conversations because money drives decisions. Let us walk the terms that appear most often. 8. Return on investment, abbreviated ROI, measures profitability. If your project costs $1 million and generates $2 million in value, the ROI is 100%. Executives use ROI to compare projects against competing investments. When a sponsor asks about ROI, they are asking whether your project deserves its capital relative to the other things that capital could fund. A well-prepared project manager has a defensible ROI number ready before the question is asked. 9. Internal rate of return, abbreviated IRR, represents the annualized rate of return your project is expected to generate over its life. Higher IRR means a more attractive investment. The hurdle rate is the minimum IRR an organization requires for a project to be approved, typically set at the organization's cost of capital plus a risk premium. If your project's IRR does not clear the hurdle rate, it will not be funded regardless of how strategic it feels. Know your organization's hurdle rate before you pitch. 10. Capital expenditure, abbreviated CAPEX, is spending on long-lived assets such as hardware, buildings, or major software purchases. Operational expenditure, abbreviated OPEX, is spending on ongoing costs such as salaries, subscriptions, and maintenance. They are treated differently in accounting and tax calculations, which changes how finance evaluates your proposal. A project that shifts costs from CAPEX to OPEX, or vice versa, may be attractive or unattractive for reasons having nothing to do with total cost. Ask your finance partner which direction your organization currently prefers. 11. Burn rate measures how quickly a project consumes its budget. A monthly burn rate of $200,000 on a $2 million project gives you 10 months of runway, which is the time until the money is gone. These terms come from startup culture, but apply to any project with a fixed budget. When an executive asks about burn rate, they are asking whether your spend pace is sustainable to the end of the project. 12. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is a proxy for operating profitability, widely used because it strips out financing and accounting decisions to show the underlying performance of a business. When someone says a project will impact EBITDA, they mean it affects the operational bottom line in a way the board watches closely. 13. Key performance indicators, abbreviated KPIs, are the metrics organizations use to measure success. Not all KPIs carry equal weight in executive conversations. These are the ones that do. 14. Net Promoter Score, abbreviated NPS, measures customer loyalty by asking customers how likely they are to recommend a product or service on a 0 to 10 scale. Scores of 9 and 10 are promoters, 7 and 8 are passives, and 0 through 6 are detractors. NPS equals the percentage of promoters minus the percentage of detractors. Projects that improve NPS get executive attention because retention directly impacts revenue over the long term. 15. Customer acquisition cost, abbreviated CAC, is the total marketing and sales cost to win a new customer. Lifetime value, abbreviated LTV, is the total revenue expected from that customer over the life of the relationship. These two are always discussed together. A common rule of thumb is that LTV must exceed 3 times CAC for the business model to be healthy. Projects that improve this ratio, either by lowering CAC or increasing LTV, are almost always fundable. 16. Objectives and key results, abbreviated OKRs, are a goal-setting framework used widely in technology companies and increasingly elsewhere. An objective is a qualitative statement of what you want to achieve. Key results are the measurable outcomes that prove you achieved it. Understanding how your project aligns to the organization's OKRs is essential for securing ongoing support, because anything that does not map clearly to an OKR tends to lose resources when priorities tighten. 17. Even non-technical leaders need to understand technology terminology to participate in modern business discussions. 18. A service level agreement, abbreviated SLA, defines expected performance standards for a service, such as 99.9% uptime or a 4-hour response time on support tickets, and describes what happens when those standards are not met, usually in the form of credits or contractual remedies. When a project touches a service that carries an SLA, the project manager needs to understand the contractual obligations attached to that service before making any change. 19. An application programming interface, abbreviated API, is how software systems talk to each other. When someone says two systems need API integration, they mean automatic data exchange rather than manual copying. APIs show up constantly in modern project scopes because most organizations are trying to stitch together systems that were bought separately. 20. Technical debt is the accumulated cost of shortcuts taken during software development. It is the software equivalent of deferred building maintenance. Projects often inherit technical debt that increases their scope and risk in ways invisible to non-technical stakeholders. When your engineering lead mentions technical debt, take it seriously and get a concrete description of which debts will affect your project. 21. 3 final areas round out your core vocabulary. 22. Sarbanes-Oxley compliance, often shortened to SOX compliance, refers to United States requirements for financial reporting controls in publicly traded companies. Projects in scope of SOX require documented controls, segregation of duties, and evidence of testing. If your project touches financial systems in a public company, build SOX awareness into your plan from day one, because retrofitting compliance is far more expensive than building it in. 23. The General Data Protection Regulation, abbreviated GDPR, is the European Union's data privacy regulation. The California Consumer Privacy Act, abbreviated CCPA, is California's equivalent. Any project handling personal data for residents of those jurisdictions must account for these frameworks, including rights of access, rights of deletion, and breach notification obligations. The rules apply even to organizations based elsewhere if they serve those residents. 24. Blue ocean strategy means pursuing uncontested market space rather than competing in crowded markets. When leadership describes an initiative as blue ocean, they mean it targets new demand rather than fighting for share of an existing market. Synergy gets mocked as empty jargon, but it has a real meaning. It is the case where the combined value of two things exceeds the sum of their individual values. In project terms, synergy usually describes cross-project benefits or post-merger integration advantages. Being able to articulate synergies concretely, not vaguely, is what separates a capable project manager from an executive-ready one. 25. A final practical note on how to build fluency over time. 26. Do not try to memorize every term at once. The vocabulary is large and your short-term memory is not. Instead, focus on the terms that appear most frequently in your specific organizational context. Every industry has a dialect. Healthcare has protected health information and diagnosis-related groups. Manufacturing has Six Sigma and Kanban. Technology has sprints and microservices. Learn the universal terms first, then layer on your industry-specific vocabulary. 27. Before your next executive meeting, review the agenda and look up any unfamiliar terms. After the meeting, note any jargon you did not understand and research it that afternoon while the memory is fresh. Within 3 months of this practice, boardroom conversations become dramatically more accessible. You will contribute more, ask sharper questions, and earn the credibility that comes with speaking the language of leadership. 28. It is acceptable to ask what a term means during a meeting as long as you frame it strategically. Instead of saying you do not know what a term means, ask for context. For example, can you clarify how you are defining internal rate of return in this specific case? This signals engagement rather than ignorance. Most executives respect the question because it shows you care about precision. For very common terms, however, learn them before the meeting. Asking about ROI in front of a chief financial officer is not a great look. 29. Let us recap. You can now recognize and use the core financial vocabulary, including return on investment, internal rate of return, capital versus operational expenditure, burn rate, and EBITDA. You can interpret the key performance indicators that executives actually track, including Net Promoter Score, customer acquisition cost, lifetime value, and objectives and key results. And you can navigate the technical, compliance, and strategic terms that round out professional fluency. Your next step is to preview the agenda of your next executive meeting and look up every unfamiliar term before you walk in. 30. To claim your 1.5 professional development units, log into your Project Management Institute dashboard at the Continuing Certification Requirements System, which is abbreviated CCRS. Select Report Professional Development Units. Choose the category labeled Online or Digital Media. Enter the course title exactly as shown on your certificate, which is Essential Business Jargon Decoded. Enter the date you completed the course. Enter the provider name as Self-Made PM. Enter the professional development unit value of 1.5, allocated to the Business Acumen area of the talent triangle. Retain your certificate of completion in case of an audit. Self-Made PM is not a Project Management Institute authorized training partner, and professional development units on this platform are self-reported. Thank you for spending these 90 minutes with me. I will see you in the next course. Thank you for completing this course. If the ideas in this session spark something for you, the next step is the book. The Project Brain, Evolving Project Managers is available now on Amazon and goes far beyond what we could cover in this session. It contains the complete system for building, maintaining, and scaling an artificial intelligence-powered project management office. The full janitor protocol with templates, deeper stakeholder simulation patterns, and real-world case studies from practitioners who have saved 10 to 15 hours per week using these methods. You can find more free courses, tools, and articles at selfmadepm.com. Again, thank you for your time, and remember to log your professional development units. I will see you in the next course. 32.